Hey everyone, welcome to the KE Report, a daily editorial on Tuesday, August 12th. Chatting with Jim Tassoni. Jim is the CEO of Armor Wealth Strategies, momentum trader. That's why we bring Jim on every month to really share with us the momentum that he is playing. And Jim, we got to start off with these markets because momentum still is upward for U.S. equity markets, especially the S&P and the NASDAQ. Continue to hit all-time highs. Any short-term corrections that usually happen on the back of news out of tariffs or some political talk in the US, those are pretty quickly bought back. And on days when there's a bit of quiet and a bit of calm, seems like money is just trickling into these broad averages. Clearly, the momentum's to the upside here. Jim, how are you playing it?
Yeah, thanks for having me on again, Corey. And it's been a great trade for someone like me who tends to play longer term momentum, longer term averages and ranges and movements. And for us, it's been a situation, and I know we've talked on the show previously that we got chopped around a little bit in April. We were probably too bearish on that swing down. Got caught as the market came back up, but luckily we're not too stubborn that when the facts change, we're willing to change our opinions. And so we got pretty aggressive in early May, flipped to an aggressive stance, got pretty long, started to really favor more of the cyclical sectors, the high beta names, and that's paid off for us really well. We continue to ride this trend, and here we are again on another really strong day, just watching this market continue to, I guess, climb the proverbial wall of worry every time. And so for us, it's a lower left to upper right trade, and we're going to continue to ride it, move our stops up, and participate for as long as we can.
Yeah, makes sense, Jim. And that's again why we like having you on to play the momentum as it's happening. And I like that you're able to change the direction when the facts change. And so you jumped on kind of the risk on trade. Which areas, if you isolated it down underneath the surface, which sectors are you most bullish on? And also maybe which sectors are you avoiding that aren't showing that kind of relative strength?
Yeah, absolutely. I think for us it's not that surprising given that we do tend to favor more momentum in our trading, that we would favor more of the cyclical sectors. We've been long technology, comm services, materials, industrials, and we've been avoiding healthcare, consumer staples, although it did have a nice bounce last week. We're not playing really in that space. So your historic, even, we've avoided utilities as well, except for some of the higher beta plays, like we've been long Vistra energy and things like that. But for the most part, it's exactly what you would think, being cyclical, being higher beta in an environment like this, and avoiding some of those more defensive sectors.
So, Jim, as much as these markets have continued to grind higher, we have seen a lot of weak economic data, and we have heard more rumblings out of, I think, some investors that, look, these sectors are getting overheated again, especially the ones that are leading these markets. Curious about your position sizing then. Are you taking smaller position sizing? Are you worried about some kind of pullback, or are you more aggressive right now?
Well, we are fully invested, so I will caveat that as far as our equity exposure goes. But with that being said, when we put on a trade at any point, we have sort of volatility bands that we're looking at when we put a trade on, and that's how we determine where our stop's going to be. And depending on how volatile the market's been, the stop therefore needs to be wider. We want to risk a certain amount in, given a certain position in our portfolio. We've got different risk metrics for whether it's a equity position, a fixed income, a commodity, so on and so forth. And so when we put that trade on, we're going to take volatility into account and size accordingly for that reason. The other thing we do that helps us and gives us some confidence in the trade is if and hopefully when the trade begins to move in our favor and begins to move up substantially, we trail a stop, and that allows us to have a locked in profit without taking the upside off the table. Now, I realize that will stop us from ever having that Superman hero trade where we call the top and get out right before it reverses. Where our trading style and system is never going to allow me or our firm to do that. But I like the idea that I never have to kick myself. And I learned this early in my trading career that there were so many times that I would cut a trade short because I had those exact same quote unquote feelings. Oh, the market's really moved here. It's got to be exhausted. It's due, quote unquote, for a pullback. And unfortunately, or fortunately, if you're long like we are, I can't tell you how many times over the last 10 years, maybe 15 years, that I've heard pundits talk about how overbought this market is and how we should all be raising cash and so on and so forth. So we prefer that style.
Yeah, it makes so much sense, Jim. And I appreciate you sharing that strategy with people with the trailing stops because you can still participate in the upside, but also have the downside protected. And if things do get sideways on you, you've got a strategy there. So, really helpful. You brought up the commodities, though. Let's shift over to some of the metals here to start with. As far as gold and the gold equities, it seems like they've kind of been channeling sideways here, but still holding up pretty well. We're in the high 3,300s today as we record this. We've been over 3,400 most of this week and last week. How are you looking at gold or the gold stocks?
Yeah, we're long both gold and the miners here via the GDX on the miner side. Both been really good trades for us. Gold a little bit, as you mentioned, a little bit choppy over the last couple of months here for us. We've been nicked out of a few long trades. We haven't really attempted to take any shorts because the longer term trade for us is obviously still in a bullish trend. Right now we're playing a long off of 33.54. So that's we've got a little bit of profit in this trade. We haven't locked anything in. We've got our stops down at 33.20. So as long as we stay above 33.20, we're going to continue to be long on the metal. As far as the miners go, this has actually been a little bit of a better trade for us. We've been long this trade for about, oh, it's almost 3 months now, going all the way back. We got long right at about the $49 mark and have ridden this trade, although it has moved sideways up and down. Now we seem on the metal, or excuse me, the miners are giving us a better breakout signal here. The big breakout was above sort of this, I'm looking at my chart here, this for us it was this 53.25 area. Once we broke out above that, we felt that we had a new bullish trend on. And now we've got our stop at 51.30, got some profit locked in, and we'll see what happens. But trends are still bullish for both the metal and the miners.
Yeah, I'd say even more so the miners. The miners have been outperforming the metal most of this year and recently had a breakout. So more curious how you trade something like a breakout that we saw in GDX where yes, it went sideways for let's say June and July, but early August breaking out to new higher levels that we haven't seen in years, actually decade plus. So how would you trade something like GDX on the breakout?
Yeah, so we had sort of this long consolidation that formed, from early June up until, really for us last week. And we kind of had this consolidation level between roughly 49.80 and 53.30. So that was this area that just sort of seemed congested for us, a lot of volume trading at both ends of that area. So we identified that as this area of consolidation where we were sort of coiling. And if I was going to trade that, we were already long, so we were just holding at that point. But if I was going to enter a new position, what I would have wanted to see is a couple of closes that sustained above that 53.30 level, which we started to see happen towards the end of July. Then we dipped back below it, but then we thrusted strong through it last Monday. And for me, that would have been a signal to that the momentum was back on and that this was an opportunity to play a breakout here after, a couple of months of consolidation.
Jim, how are you looking at silver then in contrast to gold? Silver has actually been a little peppier. It's actually had a better percentage move the last couple months than gold has, and it seems like the silver stocks by way of SIL or SILJ are finally waking up. What's your thoughts on silver?
Yeah, this is another area that, we had a really nice trade in silver. We got knocked out of it the end of July, July 31st. We got stopped out of our long, but then we went ahead on last Monday again and reinitiated another long. And I think that speaks to sort of the way we trade. We're not afraid when the longer term trend is bullish. If the shorter term trend hits our stops and we get knocked out, if we get another signal, we'll jump back on the trade and attempt it again. And that's what we did here. We're long again in the silver, in the metal. We've got our stop down at 36 and a quarter. That's where we're holding right now. And we'll just kind of have to see how this thing plays out. As far as the miners go, and when I talk to miners, I talk the SIL. This is another one where last Monday we saw what we consider to be a stabilization and a break higher. So we got long in this one as well, right at about $49. We've got our stop at 47 now, so we're only risking $2 at this point, and we'll stay long this, we'll stay long gold, and we'll trail our stops if we can, and hopefully ride this new level higher.
All right, Jim, over to copper. Last time we talked about copper, it was over 550. That was shortly after the tariff announcement. Well, I think we all know what happened once we got some clarity on the tariffs, and copper put in a pretty big candlestick the whole month. And now it's back at still historically higher prices. But look, that's a big candlestick, and the breakout was completely turned all around. I'm curious how you judge that momentum in copper, because you can look at a longer term chart and make the argument that copper still has upward momentum, but again, pulling back well over $1 from recent highs, that's not exactly the near term momentum you're looking for.
Well, and you're right, Corey. And one of the most difficult things from a technical standpoint, if you're trying to use charts and whatever system or trading style you use, if it's based on technicals, is when you have a piece of, I guess for lack of a better term, esoteric information like the tariffs that were brought in those conversations. I mean, at that point, you throw charts out the window and it becomes a much more difficult trade because you're subjected to tape bombs, you're subjected to news like what we saw. And for that reason, and I know I advocate this every time I talk to you, trade with stops. And we definitely got stop run on that huge candle move lower. We were long copper on that July 30th gap lower. We got run out. We were fortunate enough to be long from lower. We gave up a huge amount of that profit. Still a profitable trade, but not nearly the trade we thought it was going to be. But recently, we've seen some consolidation, and we think a new range has set up between, 502-ish and 433. So right now, we got long at about 445, and we're going to continue to hold that position with that stop down at 433 and see if we can make a move back up to the top of what we consider to be a range that's developed now here at 502, 503.
All right, so got stopped out, which is the point of having them, but then also got back in where you see a new trade setting up. So we'll keep you on the, I guess, bullish posture for now with copper and follow up with you down the road, Jim. Another commodity we've talked to you about in the past a number of times, and curious to get your update here, is crude oil, because it has not been very buoyant lately. It's not been like the metals. What do you make of the weakness in crude?
Yeah, this is one that, it's a little bit of a hold your nose short for us. I would much rather be shorting this up at, up in the $75 range or thereabouts. We attempted a short at it was end of June, and we got stopped out of it. We lost money on that trade, which, is part of the game. And then we initiated another short just last week at 65.50, which is working in our favor right now. We've got to stop at 67 and a quarter. We'll see what happens with this trade. Sometimes the ones you don't feel great about turn out to be your best trades, and that's why I prefer to be systematic and follow my process, because I know if I traded on gut feel, I'd be my bank account and our clients' accounts would be a lot lighter, put it that way.
Ah, fair enough. Always good to keep your clients' accounts and your accounts a little on the heavy side. Hey there. So, Jim, what about Bitcoin too? Bitcoin recently had a breakout, and it just seems continuously positive news, especially out of the White House in the US for what could happen in the Bitcoin price or for cryptocurrencies broadly. But that's also been a sliding scale because cryptos did pull back fairly significantly at one point. So, what's your play after this recent Bitcoin breakout?
Yeah, this is another one that I know we talked last time that we've been long. We reinitiated our position at about 106 on the Bitcoin futures. We've got our stop pulled up now. It was when we talked last time, it was at about 107. Now we've got it pulled up to 113. So we continue to lock profit in as the position moves higher. It's a decent trade. It's not going, nobody's going to retire off that trade at this point. But I think, to have a 1%, 2% position in Bitcoin in your longer term accounts, and I'm a trader at heart, but I do have longer term accounts. I think it makes sense. I don't necessarily know that, the Michael Saylor calls for, whatever the $5 million Bitcoin value in 10 years is going to come true. But if it does, I'm willing to risk, 1, 2% of my longer term portfolio for that potential. So I think there's a fairly decent risk reward if you keep the position small for a long term holding. And then from a trading standpoint, like I said, we're long in the trading account as well and have locked in profit, and we'll see where it goes from here. But I would really like to see it get above, that 121, 255 level on the future that it's gotten up to a couple of times over the last couple months. I'd like to see it push through and close decisively above that. I think then we could set up for that new leg higher.
Jim, just curious on the crypto space. You brought up Michael Saylor there, and obviously MicroStrategy, famous for not doing great as a business, but doing great as a Bitcoin repository. There's a lot of companies now doing that where they're holding Bitcoin on their balance sheet and they're trying to attract investor interest that way. And it seems to be working because there's a lot of companies piling in and paying a premium to that than they even would if they just bought on the futures or bought an ETF. Any interest in those kind of companies or any interest in the crypto mining companies?
At this point, I don't, and it's not necessarily because I think they're all bad companies. It's just eh, you when you've done this long enough, you know enough to know what you know and what you don't know, and what you're good at and what you're not good at, and handicapping whether or not these companies, whether they be miners or the balance sheet type companies, are going to be the way to play this in the future is it's just too opaque and too difficult for me right now. I saw too many companies at various times in my career jump on the hot thing, stick, whether it's stick AI, stick Bitcoin, stick .com behind their names and ride that wave for the short time. And unfortunately, more times than not, it ended up in a negative fashion. So for me, I'd rather go straight to the source. I'd rather just own Bitcoin at this point. Not saying that there aren't some miners out there that are probably going to be phenomenal companies and figure this thing out. It's just not my bailiwick, and I don't have enough breadth of knowledge or bandwidth to dig deep enough to get comfortable putting my money or my clients' money into, into those stocks.
Hey, fair enough. It also all just comes back to Bitcoin. Bitcoin is that sector darling, and really it's the talk of the town still and has continued to perform quite well. So, sounds like a lot of momentum out there that you are continuing to ride, and rightfully so. We continue to see markets continue higher throughout this summer period. I know a lot of people still waiting for a correction, but as of right now, any correction, albeit the very short ones, have been great buying opportunities. Again, Jim Tassoni, president of Armor Wealth Strategies. Click that link in the show notes to visit Jim's website and follow along with what he is trading. Jim, thank you as always for your time.
Thanks, guys. Take care.